Apes and apettes, welcome back to the channel. I hope you guys are doing fantastic, but I want to take a couple minutes to go over exactly why the share utilization on AMC, GameStop, and other more retail stocks, in big air quotes, are shooting through the roof and essentially at 100% on most of these stocks. And we're going to take a look at what the exact numbers are on all of these different stocks, but exactly why this is happening, as well as what to expect next in the marketplace. So let's dive into this video. If you guys find education, if not simply entertainment out of it, hit the like button for me, subscribe to the channel, as well as comment down below. And if you guys want to get some totally free money is always a good thing, no matter what time of the year it is. Check the link out for Moomoo as well as Webull and Public down below in the description of this video. All of those providers have upped their promotional rewards. So if you're not signed up with them, check it out. No minimum deposits most of the time. So let's dive into this video. Obviously, like we went over in the last video, it was not a great day for the broad markets. And let's briefly talk about why that is, in case you are unfamiliar with what unfolded today. So essentially, Fed Bullard dropped the ball on us. No other way to put that. He came out and said that by their July Fed meeting, he wants interest rates to be at 1% to 1.25%. This is what the federal funds futures have been pricing in, and you guys can watch this for yourselves. Just go to investing.com/Fed rate monitor tool. It tells you exactly how long down to the minutes before we do get Fed Jerome Powell. That is March 16th at 2 p.m. But it also tells you the market's expectations for rates, and this has actually been rising over the past week or so, as well as the 10-year treasury yields, like we have talked about on the live streams and in other videos. But the markets have been really disregarding this. Even once CPI numbers came out today at 7.5%, month over month inflation of 0.6%, the markets pretty much threw that out the window. As soon as markets started trading, they were down substantially, and we almost went positive today. I believe we might have touched positive a couple times earlier today, but the markets only started selling off for one reason. Only one reason. It was Fed Bullard. If we do type in Fed Bullard news, that's exactly what he said. He wants interest rates to go to 1% by July, what the markets have already been pricing in. So he pretty much set in motion what the markets have kind of been trying to ignore. So the markets are paying a little bit more attention to this. And as far as what to expect going ahead into the future, well, pain in your portfolio is not good in the short term. It is always going to happen. AMC is no different. If you are an investor in AMC, you are waiting for the MOAS, you should welcome red in your portfolio. That sounds contrary to popular belief, but as we get into why the share utilization is at 100% and exactly what the order flows from institutional investors as far as options have been, you will understand exactly why I am saying this. And long story short, why you want to see pain or red in your portfolio in the short term is because that means less money for the institutional investors to service their margin calls. Think about it like this. If the stock goes to $2,000 overnight, not all hedge funds are going to have to cover, right? If the markets were flat, not all hedge funds have to cover. The smaller guys that don't have as much liquidity will have to cover, and that will drive up the share price even more. But the large guys might not have to cover because they have so much money. Once the markets go down, once liquidity gets sucked out of the marketplace via the Fed raising rates, the treasury yields going up, or whether it is the markets going down, or regulation for that matter, that can also have an impact to liquidity. That's when you see more short squeezes in the marketplace. And that's when you're going to see even the large guys start to get margin called, because as liquidity goes down, as the price of the stock is going up, there's less money when the broker calls you up and says, hey, we need $1 billion to service your margin call in the next 5 or 10 minutes, or we're going to liquidate your position, to front run any losses you might incur if the stock continues to rally. Right now, there's still ultra high levels of liquidity, but imagine if the markets did a flash crash or just crashed in general for an extended period of time. Yes, you will see pain in AMC, in retail stocks, in stocks like me and you own. AMC is my largest loss in my portfolio. So when I say this, I am right there with you. Keep that in mind. But essentially, that's getting closer to the end game of the MOAS. Like I've said many times, AMC could rally to all-time highs, and it still wouldn't be the MOAS unless the shorts cover. We all know that. But on the other front of this, I do want you guys to imagine it like this as well. Stocks go up, stocks go down. So as long as there is a lot of liquidity in the markets, the hedge funds, as the stock goes up and we get these fake squeezes, they don't have to cover as long as they have that liquidity. So they'll wait for the stock to go down and potentially to that break even point or even profit on those short positions. Then they might cover, then they might add to their positions, whatever they do. But as the stock goes up, that's fuel to the fire as more and more hedge funds are not able to service their margin calls because liquidity is restricted. So hopefully in that couple minute brief overview is why I say what I say and why I want the markets to go down. Keep in mind, I will reiterate this again, AMC is my largest decline in my portfolio, so I am right there with you. I'm not an analyst saying, hey, we need this to cause this. I mean, I'm not really an analyst anyways, but I'm some guy telling you that also has major losses in AMC with an average price in between $35 and $37 depending on what portfolio we are talking about. Now to get down to business and exactly what 100% share utilization means. This is a very bullish thing, and let me point this out for you guys. So AMC is at 100% share utilization. No surprise, we've covered it for a while. 7 days go at 80%. So is GameStop. SoFi is at 93.94%. 7 days ago at 58.58%. Bed Bath & Beyond has even seen about an 8% jump in share utilization. Lucid is at 100%. All of these more meme stocks have seen jumps in the share utilization. Something else I do want to point out for you guys is the option flow. For Lucid, you've seen 84% positive order value today, which is exceptional. Bed Bath & Beyond, I'm going to throw them in this category because they do move the markets, but it has a lot less liquidity than something like GameStop, Lucid, or AMC does, and that disappointing positive order value of 0%. We'll move on from that. AMC, like we covered in the last video, 72% on the day. Keep in mind, all of these stocks were substantially red. GameStop, not as favorable, 11% positive order value for the day, but over the past week, 64%. Yesterday was 72%, a lot better than you would imagine when looking at the charts of these stocks and what they've done over the past couple of months. SoFi, the option flow sentiment, 99% positive. Yesterday, 100% positive. The last week, 88% positive. So what is this telling you that is going on with the retail stocks? What's it telling you? Institutional investors are very bullish in these stocks at these prices. They are buying a lot of options, like we've covered many times. A lot of the order flows that are coming in from institutional investors are 3 to 9 months down the line. The January 2023 options as well as the March 18th through till 2023 option chains. But a lot of these orders that are coming through are the $35 strikes, the $50 strikes, the $110 strikes, and the $80 strikes. That is something we have not seen since before November when AMC was sitting at that mid 40s range. So that's all very exciting. That's the same story within GameStop, SoFi, Lucid. Bed Bath & Beyond, like I said, has a little bit less liquidity, so it's harder to actually tell with them. But what exactly does share utilization mean? Back to the actual title of this video. Simply put, if you are a holder of a stock like AMC, GameStop, Lucid, SoFi, and the stock is down 50, 60, 70, 80% from where it just was a couple of months ago, and you start to see a lot of bullish activity from institutional investors, your friends, if you're an institutional investor owning, AMC or any of these other stocks that has that inside information, would you lend out your stock for 2 to 4%? Or would you hold on to your stock when the stocks are going up 10 to 20% on any given day over the past couple of days? You would hold on to your stock. You would not lend that out for 2 to 4%, especially since if you're an institutional investor, you have more information than we do. So long story short, it means that there is a higher implied move. Just like essentially when earnings come around for companies, you see IV, implied volatility. That's why a month before earnings, the contracts on the option chain aren't that expensive. And then the day before earnings, they're juiced up. They're super expensive on the call and the put side, no matter what the stock does on that day. If it's up 5% on the day, the puts are juiced as well. Nothing is cheap because people are implying the moves. The market makers are implying a certain percentage move after earnings. That's the same thing that's happening with this share utilization. They are implying the stock is going to go up more than the cost to borrow in the near term future. So they are not willing to lend out those stocks. That is why you have seen a jump in all of the share utilizations, and that is very, very bullish, and that is one of the most bullish things we have seen in a very long time. So I don't want anybody to be confused. You can see short-term rallies, and all of this information, really this data that has been shown to you guys does support a near-term, short-term rally, but the ultimate end goal of this whole movement is restricting the liquidity that hedge funds have at their disposal. So that is all for this video. That is what you guys need to know, and I hope you got some value out of it, if not entertainment, or at the very best, education. So thank you guys for watching, and if you have not already signed up with Moomoo, Webull, and Public, like I said, check them out. Get yourself some free money. That's the worst thing that can come out of that. Join the private trading community if you want to grow your knowledge with options and join a very skilled and educated group of investors. A lot of up and comers in there that hit some monstrous trades that they source themselves. Shout out Nico, shout out NV, shout out all you guys. Thank you guys for being a part of that program. It has been a blast so far. So that's going to be all. Thank you guys for watching, and I will see you in the next one.